26, guys, is the year of discipline. And we say all the time that ownership is not deserved, it's earned.
Well, doing liquidations, guess what happens when they have 5% equity in their home and they default on their SBA loan and you start pursuing them in liquidation? They see their friendly bankruptcy attorney the next day.
I used to think cash flow was the most important thing. I have changed my song now. Equity is the number one deal killer. If you don't put in enough, you don't have enough, it will kill your deal.
Every sales guy especially would wear a different hat if they went through liquidation, right? To understand this is how ugly it gets, right?
If a seller finances 50% of a deal and only 5% of its equity injection, I fall in love with that loan because that's going to be a really easy loan to liquidate.
All right, welcome back to Lords of Lending. This is going to be a good one, guys. We're excited. You have our fellow lords, myself, Shane, and Brian. And today we have a special guest. I call him the OG of OGs, Lance Sexton. Lance, we have the pleasure of working with him every single day. And he is just the best guy on the planet, not just because he knows everything there is to know inside and out about the SBA and everything that we do on a daily basis, but just a fun, sarcastic, I would say, always happy-go-lucky. Yeah, and this guy deals with the cleanups. He's the cleanup man, right? Just like in DC. So who would have thought that your career is being the cleanup man? But that's what he is, and he does it well. And on the sales team, the interesting thing is we all roll and pump loans out, but Lance is the guy that actually has to deal with this stuff on the back end. So
He's the
we complain about the rules and we complain about structure and we complain about how things are not fair, and Lance actually has to do the cleanup. So today, this is what we're going to talk about. Not headlines, not hype. We want to talk about real ownership, but also what it means. Not just here are the rules and spit it out and banker talk, banker to banker. We wanted relevant information that business owners need to hear, right? And this is, I think, the part that we don't talk about enough is with a guy like Lance who sees the backside of the moon, to share that information. So we talked about 25 was the year of volume. 26, guys, is the year of discipline. And we say all the time that ownership is not deserved, it's earned. And we're seeing it more and more. And I'll tell you, as three sales guys, Lance, you're gonna cringe when you hear this, but we're starting to lean towards the tightening is good. We need discipline this year. I mean, the SBA pumped out 100 billion last year. We can't keep leveraging this country, man. If you want to buy a business, you need equity. So you did a webinar this week and you had me on. Thanks so much for having me. I think we
Yeah,
want to talk about equity.
that
Um,
sounds good.
Today, you know what I believe now? I used to think, cash flow was the most important thing. I have changed my song now. Equity is the number one deal killer. If you don't put in enough, you don't have enough, it will kill your deal. All right, so let's get into it.
Wait, hold on. Before we do that, Lance, what's your favorite music?
Uh, the tough part for me, Shane, and everybody is I was a disc jockey in
I believe it.
my senior year of high school throughout college. Not a radio station disc jockey. I did dances. And if you guys have ever seen Saturday Night Fever,
Oh yeah.
I was the DJ. I wore a red felt hat and I had a
Yeah.
shirt, and my nickname in high school was Lou, Lou. You guys ever heard of Lou Brock, the St. Louis Cardinal baseball player? That's where my nickname came from. Not because I was fast. I'm
Not
not
a
sure
clue.
where it came from, but I had a shirt with felt letters, multicolored letters that said "Disco with Lou."
Holy hell.
This is
I
amazing.
I need that shirt.
Oh,
I need
I
one.
can dig up a picture.
we're
That's the
making t-shirts.
best.
But Shane, to answer your question, my musical taste is all over the place. But if I holler at Alexa behind me, I'm playing 70s funk.
70s, funk, fire, living the damn dream.
I would not have guessed that.
that was my Saturday morning, you need to clean the house music that my parents played. I actually, Brian, I think every time you came over to my house as a
Never
kid,
came
you knew
over.
Earth, Wind & Fire was
Earth, Wind &
playing when you
Fire.
walked in the door. Love it. Hats off to that gloriousness. Here's the reason I ask, and I'm going to pull it right back to what Stephanie said about the need for equity, right? So I'm a sales guy. That's like telling me to go like country music.
Yeah.
I don't like country music. I don't like the idea of it. Equity takes people off the table. So I might have some levels of disagreement with Stephanie on the need for equity, but it's more so how can I get creative to make equity or the hooks in the business more useful? How do I get more out of my equities? Maybe I'll play that. So like instead of country, I don't know, maybe that's a terrible freaking
A
analogy.
lot of people like country, man. Country's, I mean,
Value, it's like I'm going to turn that off.
there is some good country though.
There's
Oh,
some country
absolutely.
pop these days. It's kind of like nice. So we're going to say this is country pop when it
Yeah,
comes to
pop.
equity.
That's a
Country pop. Boom.
Yeah.
Go with it. It's random as hell. But Senior Lance, let's talk equity and let's get into where stuff gets really freaking ugly. The murder mystery stories of SBA when all
on
is
the
said.
back. Like, isn't that a big issue on the
Oh,
back end? It's like, man, this guy has no cash.
Well, I think the thing about equity injection that becomes so critical is if you have, for instance, an early default loan that goes into guaranteed purchase. Now I'm going to talk. There are people that say I should have insurance on my mouth, but I'm going to talk real.
I like it. Like J-Lo's. No.
Yeah.
No.
But oh, but equity injection, early default. I'm going to talk guaranteed purchase for everybody. If it's an early defaults within 18 months of the final disbursement, you've got to present all of your equity injection information. All of that has to be buttoned up. You got to have proof of the source of equity injection. Now, some banks over-engineer equity injection. You only need 2 months worth of statements to prove the source of the equity injection. Some banks will ask for 3, some will ask for 4. You don't have to go back. You don't have to prove equity injection back in June of 2025 today. You need to show a couple of months that prove the equity injection in or existed. Now, when I built an SBA lending department at a community bank and had everyday interaction with my customers, I would say, I had a good customer whose name was Brian. I'd say, Brian, you need to move $25,000 over into this business account, let it set for a couple months for me so I can do your next SBA loan. So I had 2 bank statements that perfectly proved equity injection. However, that don't occur on most deals. But, we need something. And the same thing with gift. If we have a gift from I had a guy who bought a trucking company. It was a $2 million deal. He bought a trucking company. His grandfather gifted him the equity injection. I just told grandpa, I'm like, part of the requirement is I need you to give me a couple of bank statements that show, the equity injection was $250,000. I said, I need a couple of bank statements of yours that show $250,000. Well, this guy was a former Walmart. He was part of Sam Walton's team in the first couple years. He gives me a couple of bank statements and I see the balances and my eyes almost pop out of my head. I'm like, oh my God. I just asked a guy worth $300 million for a bank statement to prove a $250,000 equity injection. So early default loans, we got to have that proof and we have to be able to show that the equity injection occurred. And this is quite often where it goes awry. And this is something both for lenders and for borrowers. That equity injection has to happen. We have to be able to see it before SBA loan funds are dispersed. Because in a guaranteed purchase world, if the equity injection does not occur before funds are dispersed, guess what? And I used to teach my people at the Little Rock Commercial Loan Center. If equity injection doesn't occur before funds are dispersed, you use loan funds to provide equity injection. That's the assumption that's made. Very critically important on loans to document equity injection appropriately. Now, Brian, Shane, and Stephanie, you're going to ask me, what happens after the early default period? Nothing. SBA normally does not require any equity injection information if it's not an early default loan. So, but as a sales team,
Interesting.
and I always hear underwriters get wound up about equity injection. They're like, we're trying to be prudent, we're trying to protect the guarantee. The
Ooh,
reality is, if you can get past the 18 months after disbursement, it's I've seen it.
Interesting.
Guys, I've done over 1,000 purchase packages in my career. Non-early default loans, I've only seen requests for equity injection information probably less than 10% of the time.
That's
After the
really
early
interesting.
So, yes, it's critically important, but, it's kinda I wish every person in SBA lending had to spend a year in liquidation. So you could see,
Yeah.
because we're told all these interesting things about, well, we're trying to be prudent and we got to do this. Well, the reality is, being prudent means doing the loan in a way where the guarantee gets paid. And so it helps to have seen how the guarantee gets paid. And uh, Shane and Brian, one of you live in Salt Lake, or
I used to live in Utah.
You did, yeah.
Brian did too at
okay,
some point.
I did.
guys, I cut my teeth on guarantee purchases in Salt Lake City at a bank in Layton, Utah.
All right.
The FDIC closed a bank in Layton, Utah, and one of the things, when there was an SBA portfolio, I was working for Deloitte, we had to do a guarantee purchase package on 100% of the SBA portfolio, whether they were performing or non-performing. And that was where I kind of fell in love with trying to fix things to get the guarantee paid. And but it happened in Utah. But that's my story on equity injection from that perspective. And for borrowers, uh, my big deal with equity injection, I mean, do you buy a house with nothing down? Not typically. Do you buy a car with nothing down? Most cases, no, although I just did the other day. do, do you, you know, there, it's what I call, it's skin in the game, guys.
Yeah.
The borrower needs to be at risk, and that's what all that's equity injection collateral. Uh, you
Yeah.
know, the borrower has to have some skin in the game.
Right.
Do you see that,
Yeah.
Lance, is having more skin in the game? Do you see that on the backside as an indicator of the success of a loan not going into default?
I absolutely, if they have an adequate equity injection, they're less likely. We had a loan not too long ago that went into liquidation. And the reason, and they had struggled, and we had communicated with them very regularly. And the interesting thing about it is, when it came time for us to start pushing the issue of the junior mortgage we had on the residence, all of a sudden they came up with the money to pay the loan off. So equity injection and personal collateral are critical in recovery on a liquidation case.
Hmm. Interesting.
But
Personal collateral. Well, and you know what though? Just like you said, we have become such a society of leverage and loans that there is no equity in their home in many cases now. No one, I mean, it
no,
is rare now that I see someone that has significant equity in their home. They've used it. And so if
uh,
there's no equity in the home, no equity in the business, used up all their cash, worth the 2025 was the year of thin loans.
oh yeah.
Everyone was thin. 26, I'm starting to get back to, yeah, equity. I want to see equity in the home because, yeah, what's the point of taking it if there's nothing in there for the guy to, feel responsible for?
But Steph, you bring up such an incredible point. I call them pesky junior mortgages. I hate junior mortgages on residential real estate. And honestly,
Yeah.
Bob Coleman used to joke with me. He's like, okay, you're underwriting a loan and there's not full collateral coverage, and you're trying to meet the all available collateral, yet their personal equity in their home is only 10%. What's Lance going
Right.
to do? And I used to
Right.
would say, I'm going to go ahead and take that junior mortgage. This is what I used to would say. I'm going to take that junior mortgage for commitment. Well, doing liquidations, guess what happens when they have 5% equity in their home and they default on their SBA loan and you start pursuing them in liquidation? They see their friendly bankruptcy attorney the next day.
Yeah,
And
exactly.
we lose the ability. So I've told for the last couple years, I know what the rules are. I know it's all available collateral. I know if we're not fully secured on a discounted basis, we have to look at personal collateral. I'm telling SBA lenders, if you look at it and it doesn't meet the threshold that the SBA has for equity on that junior mortgage, don't take it. Because
Yeah.
in liquidation, we look at something called net recoverable value. So let's talk about a home that's 500,000. Maybe they have 100 and let's say they have $100,000 in equity in a $500,000 home. If we foreclose and try to perfect that, so they have a $400,000 first, we're going to spend at least $20,000 foreclosing. We're going to have to pay off the first mortgage of 400. So we're in it for 420,000 right out of the bat. When we sell that home, the selling and listing realtor is going to make 30 grand. So, we're in it for 450. We're not going to sell it for the appraised price. It's a foreclosure. Nobody will
Yeah,
pay full
exactly.
price on a foreclosure. So the long and short of it, you can have, unless you meet those minimum thresholds that SBA has, SBA lenders don't take that junior mortgage because it's kind of a waste of time. But on the reverse of that, guys, I did have a junior mortgage pay off 10 years after the loan defaulted. The person defaulted, uh, they rebuilt their life. They still had their house. We never released the mortgage, and they wanted to buy a new one, and we did get recovery. But that's the
Yeah.
diamond that's hidden in the big
Yeah.
pile of hay in the.
Yeah.
I mean, it doesn't happen hardly ever. So on that junior residential or junior mortgage on residential real estate, only meet the SBA requirements. Anything below that, walk away. It's not going to be cost effective.
Okay, so I'm gonna jump in on with this, Lance. Imagine me as that little thought bubble, when someone's watching the YouTube video and they're like, "You see Shane's face," and it's pause. I see a couple different words coming out of and see and hear a couple words coming out of Lance's mouth that need to be explained in the event that this is ever listened to by somebody who isn't a SBA lender. So he uses words that I think they're softer than because they're in the banking environment and all of us understand it, but they're kind of brutal to a small business owner. We talk about guarantee repurchase and liquidation and stuff like that. Liquid sounds all nice. It's a soft word. What is describing? No, that means that your crap went to hell and now we're going to go clean it up. Like right when all is said and done. And that's us trying to figure out how in the heck we're going to go get our money back that we lent to you because the business is shut down. Everything's gone to hell. So what Lance is doing when he's saying liquidation and guarantee repackage, we couldn't get it trying to sell your garbage of what was left. And now we're trying to go get the government to pay up that guarantee repurchase. It's important to understand, though, and what he's talking about, because through that just wonderful Southern, beautiful draw that Lance has, that just makes it sound okay. Like I'm going to be
Yep.
okay.
It'll be
This
all right.
is gonna be fine. Yeah.
The ugly crap on the back end. There's a level of confidence of what he's gone through because he's done it so much, and him saying that everyone should go through liquidation. I heard a great man that we worked with before that came from liquidation. Like, yep, every sales guy especially would wear a different hat if they went through liquidation, right? To understand this is how ugly it gets, right? So, in the end, what I come back to, and it's the last point that you kind of were bringing up, that this idea that of us taking a lien on your house in second position, this junior position, like going just put a lien on it because we can put a lien on it, not because we have to, but because we can. It's a three-headed dragon that, in my opinion, that exists in SBA. You've got your sales team, your credit team, and then your servicing team when all is said and done, right? That servicing team. And we don't communicate very well and very often. It's like there's a lot. We kind of stay in our little silo seats and we do our little jobs, and then things just get passed to one body to the next one. And how that affects a borrower is that decisions are made from a sales guy of what we think we can make work, and then a credit guy gets it and he thinks he's doing the best to mitigate risk, but he's not thinking we're not all thinking what's happening down the line. And then the servicing guy gets it and just kind of does what he has to do with it to perform his job. But the grand theory, the lending ethos of what should be in place to try to like help govern better decisioning usually isn't there. And most banks don't have it. I've worked at 7, all absent of the ability to communicate perfectly to make the right decision. Like, yeah, it makes no fiscal sense for us as a lender to take a second lien on a house that we don't have to by SBA rules, because all it's going to do is cost us more money. We're actually going to lose money on it. Don't
Well,
force us into that hole if we don't have to, right? So it's a bad investment decision for an SBA team to do that. And there needs to be someone in the seat or someone that's the thinker that makes that decision that, guys, no. Let's work as a team, not as a silo. We're going to make this investment decision so we help the borrower, don't hurt them. We don't put this into an ugly position to be a bad investment partner for a borrower to want to work with us, right? A business owner.
Well, and I wanted to, this is a discussion of equity injection, but it's funny how we've gotten on to collateral. But I'm sitting here listening to this discussion, and life insurance is something I want to talk about. This is
Oh, yeah.
for borrowers. This is for SBA lenders. The SBA rule says you only have to take enough life insurance to cover the shortfall. And I see SBA lenders getting this wrong all the time, where they'll have $1 million loan that has collateral, and then they go and ask the borrowers for $1 million worth of life insurance. Not just, let's say you have 2 partners, Brian, Shane, let's say you guys partner, or Stephanie and I partner, and we're starting a small business and we're borrowing $3 million. I see lenders that, like Brian and Shane, if you were doing a $3 million loan, they'd ask you both for $3
Yeah.
million in life insurance. Now, you guys are young, so that might not be very impactful, but can you imagine what a $3 million policy would cost this guy? It'd be scary.
Yeah.
Life insurance only is required to cover the shortfall, meaning you have a $3 million loan that has $2 million worth of collateral on a discounted basis. If that's the case, I need a $500,000 policy on Brian and a $500,000 policy on Shane. And I see lenders all the time require more. And the reason that troubles me is that when you work liquidation, you will see, I've had a SBA borrower come to me and say, well, my life insurance premium was $2,800 a month. And if I had that $2,800, I would have been able to pay my loan payment.
Yeah.
And in that particular case, I had a past due borrower that was far down the road going toward in fact, I probably should have put him in liquidation. Guess what I did? I released the life insurance. I canceled the requirement for life insurance. There are things that servicing can do to an SBA loan that don't require SBA's approval necessarily. Changes in collateral, and that's why I mentioned life insurance is collateral. An SBA lender has unilateral authority to release or take collateral, does not require SBA's approval. So in servicing, and I'm telling you guys this because you're on a sales team, if something goes through underwriting and underwriting may over require it, talk to your servicing people. They may be able to fix it down the road. I mean, in this
Yeah.
particular case, they over required life insurance. This borrower was not my age, but pretty close. It was a huge premium. The guy had a $5,000 a month SBA payment, which that seems kind of low now, but he had $2,800 a month in life insurance premiums on an SBA loan that only had a $5,000 payment. And he was having cash flow issues and not being able to meet the payments because he had the life insurance premium. So I said, hey, I've got a fix for you. I'm releasing that life insurance so you can make your payments. Guess what? I found out a couple years ago he paid that loan off.
Wow. See?
Paid it in full.
And you know what, guys? That is my big hot button, is following rules. And then there's a difference between following rules and then this overreach, overabundance of caution, right? Where we're not thinking through setting a borrower up for success or setting them up for failure. And that's the biggest responsibility that we all have as lenders. And I think small business owners listening to this, I really want to highlight your experience, Lance. because anyone tuning in that doesn't know you, because our audience is more people that are outside the industry, not so much in the industry. I was looking up Lance's LinkedIn earlier because I wanted to make an intro of his experience. When I say he is the OG of OG, Lance was the deputy director of SBA liquidations. He basically has run liquidations for every bank in this business at some point or in time, whether it be through the SBA or was an EVP, executive member of teams, his entire career. And we're talking what? How many years, Lance? 30 years?
I started in 1983 when SBA loans were packaged and taken directly to the Little Rock district off or the state district office, but got for you guys, sales.
Yeah.
I had a $78 million year about 15 years ago. That was not too bad in production.
Wow. That's amazing.
Yeah, that's insanity.
As we do what we do every day, guys, it is really, really important for us to tap into resources like the Lance that we have on our team and Lance's reach across this country. As an owner, you know what I want to do? I want to know, hey, give me what is Lance's tip, number one tip for a small business owner on how to succeed. From your experience, what has been the number one reason for failure?
There's a number of things. One of the biggest things I see is inactive owners. I was a small business owner earlier in my career. I came in Monday through Saturday. I worked 10 to 12 hours a day, Monday through Saturday. After church on Sunday, I would go praise the Lord and then I'd walk down to my office and pay bills. Sometimes I
Yeah.
would pray so I could pay my bills, but
Yeah.
uh, I think inactive ownership is a challenge, but one of the things I want to caution every small business, I see this a lot in SBA lending. Please don't accept everything that gets pushed at you from an SBA loan perspective. I sometimes see SBA borrowers that are getting close to the closing table and unrealistic expectations, and they feel like they just have to close the loan. And I mean, guys, we're in the business. We have to close loans. As a team, we only make money when we close them. But sometimes small business perspective or existing small business owners, they've got a loan that's in the process and there's a requirement that's not reasonable. And they just accept it and close it and hope that everything's going to be okay. Uh,
Mm.
so, I mean, I encourage small business owners and guys on Coleman Report. I take phone calls from people throughout the industry and I get probably 20 to 30 of those a week. I also get the occasional call from an SBA borrower, which I enjoy those the most. I had a borrower the other day who had a small business. It was a successful small business for 25 years. His wife had signed a limited guarantee, limited to the interest in their residential real estate, and the bank was pretending they were gonna make a hard press for her on the deal. So, I advised him on how to go through this liquidation process because as a servicing liquidation person, I've softened over the years. I used to, like, bury them, bury them, bury them. Now I'm in a role of I want that couple to walk out of this SBA loan and still have a shirt to wear and a pair of pants or a dress to put on
Yeah.
or whatever. I want them to still have a car to drive, a home to go to. I want to have them go through liquidation and walk out with dignity. And I know
Yes.
that's kind of a conflict for most people, but I've got a servicing team member, his name is Joel, and he's in that same boat with me. And Joel worked for me at the Little Rock Commercial Loan Servicing Center. We try to work with customers. We want to maximize the liquidation recovery, but there's a way that you can do that and still let the small business owner walk out with dignity. So, I mean, I make sure you work enough for the small business owners. Make sure you don't close a loan just because you feel like it's the only way you can get it done. I mean, I want you to get an SBA loan. I want you to close your loan. But if for some reason a SBA loan has a condition that's ridiculous, take the time to push back and get that worked out before you close the deal and move forward. I know sometimes There, contracts that need to be extended, but take the time to do that. And project the funnest thing. I have a dad that's been a small business owner since 1967. And guess where my dad is today? He's in that retail business operating. He turned the key on the door about an hour and a half ago, and he's selling product. Uh, he has owned convenience stores. He's on franchise restaurants. He's on my favorite, and I owned this store for a little while, a Radio Shack.
Yeah.
In fact, he still owns the Radio Shack. And if you want to go in and buy a resistor or capacitor or microphone or a computer, you can go to my dad. But
That's awesome.
the things he taught me is their numeric metrics, like for instance, when you're doing projections and you're developing your business plan, make sure you use common sense. My dad can still tell you he owned a Western sizzling restaurant for 25 years. He can tell you how many dollars per seat he averaged and how many times he turned each seat. And his revenue projections were based on that kind of information. We want to make sure when we're writing our business plan and we're doing projections of cash flow for the small business that it's not just to get the loan. It's to operate and
Yeah.
manage the business. So let's use common sense there.
100%. I'll tell you what, you are a true inspiration, Lance. I love having you on the show today. Please come back again many times.
Do we have time for one more tidbit?
Yes.
Oh yeah.
Story time.
Seller,
Take it away.
I want to talk about seller financing because I'm very passionate about this.
That's good because it was on my list. Okay.
Bob always accused me. He's like, Lance, you got down to point number 3, slide number 64, but on slide 3, seller financing as part of a change of ownership loan, I think is critical. And we were started out talking about equity injection. You can have seller financing on standby. And I want to be clear because I know their borrowers. Standby means no payments at all. No principal, no interest, nothing. And trust me, if you think you're going to sneak around the corner and start making payments, your servicing specialist is going to find out. But
Yeah.
seller financing on full standby, you can do. So there's a 10% equity injection requirement. You can do 5% owner cash, 5% seller financing on full standby. But as a servicing team member, I love to see more seller finance. And here's why. I had a borrower the other day that defaulted on an SBA loan. There was seller financing involved that was part of equity injection. We go into liquidation. Guess who bought the business? The seller. So it's better than collateral. And here's the thing, seller financing in excess of the 5%. So this guy had done 25% of the deal. 5% was counted as equity injection on full standby. He did another 20% that had principal and interest payments. And that's perfectly fine. And that gives me a committed seller who's just cashed a big payday because once the loan closes, he gets a big payment. But it gives me a committed seller that we talked about equity injection. The seller has skin in the game at this point.
Yeah.
And so if there ever is a bump or a roadblock, I've, as a liquidator, have somebody to go to and say, hey, we've got an issue. You've got a second mortgage. What do you want to do? And in a lot of circumstances, that seller steps up and purchases that business. So seller financing as part of equity injection, I think is so important. But I mean, I love to see a seller finance, and some SBA people don't like this because it has to be worked into the cash flow projections. But I love a seller. If a seller finances 50% of a deal and only 5% of its equity injection, I fall in love with that loan because that's going to be a really easy loan to liquidate. And sorry, guys, for me getting off on tangents, but
No, it's great.
I am.
We talked about that last episode.
Yeah.
Yeah.
We'll bring that back, actually. That's a great nugget for February. Fall in love with seller financing. Isn't that great for February? You get it?
Oh yeah.
Boom.
So, boom. That's it.
Nailed
I just brought it. Nailed it.
Nailed
Thank you, Lance. You're the best. We absolutely love working with you every single day. We're
I love
honored,
working with you guys.
humbled, and lucky. We need to get you back on here. I think next when we talk about seller financing, that nugget of seller financing is a more important topic to talk about than collateral. I love that line.
Yeah, I think so. I really believe that. And it's been a blast, guys. And I love working with you guys. And I also love the idea of this podcast not being just for SBA lenders, being potentially for SBA borrowers and prospective SBA borrowers. Because do you know who some of my most enjoyable calls are with?
Other
So the
than
guy,
me.
yeah, other than
Yeah.
Stephanie when
Yeah.
I'm on the
Mm,
way to get my breakfast biscuit. No,
yeah.
but the borrower I told you about where his wife had a limited guarantee, was able to advise him, "This is how it's gonna go. They're gonna push. They're eventually gonna back off. Your wife's gonna get released. Don't get an ulcer. Don't have a heart attack. Don't have a stroke. Here's how it's gonna go." Some of the calls with borrowers have been so fun for me and so refreshing because I can take somebody who's literally mentally stressed and bring relief to them.
That would be a fun show. Wouldn't that be a fun show to
Yeah.
bring on borrowers who actually want to ask the wizard?
I have tried to encourage. I mean, you guys know I've done training for SBA participant lenders now for a long time. I have tried over the years to encourage somebody to be the SBA voice for borrowers. And here's the thing, back in PPP, I was doing PPP training on a weekly basis for lenders. And I kept telling somebody, guys, there are 5, 6 million PPP borrowers who just got a loan, who don't have a clue what they did and, and don't know what the next steps are. I said, could you imagine if we did a PPP loan training for borrowers and you only got 5%, 2%? I mean, it's going to be the biggest crowd you've ever had on the webinar. And I
Yeah.
tried to, I'm like, charge them $20 so it's affordable.
Yeah.
And, but the numbers, so when we were doing the PPP training for lenders, we'd have 1,000 people a day, a
Interesting.
Wow.
1,000 lenders a day.
Jeez.
Uh,
Look at that.
but can you imagine how many borrowers? And this is the same thing with SBA lending. I love the fact that this show is doing something not just for the lenders, not just for sales team underwriters, closers, servicing people, but borrowers can get relevant information here.
That's it.
That's the
And
goal.
and our whole goal here, really, the theme for Lords of Lending is owning ownership. And what that actually means, if you own a business that's 100% leveraged, do you own anything? You know, and then it's setting them up for success for generations. Like, we don't think of anyone as transactional. We're building legacies here, and our Lord's podcast is about that: how to build legacies and help entrepreneurs with this business and the next business and the business after, and then their kids taking over, and this making this a family multi-generational legacy build initiative. That's what we're all about.
Stephanie, you make me think of my family. My dad started a furniture store, retail furniture store in 1967. My brother took that store over, I don't know, I was too young to want to be a part of it. I was single and just freshly out of college, and my brother took the store back in the early '80s, and he's had it, and now that's transitioning to my nephew.
That's
And
awesome.
it's just a beautiful thing to me to see a business be there for, now 58 years
Hmm.
and 3 generations have been involved. It's created wealth for 3 generations,
And that's
and
why we do what we do, and we're as passionate about what we do every day. And we choose to do this every single day because we love it, we believe it, and we love the American dream. Like that is just our thing, right? And so,
abs
all right, to close up our podcast, the market's hot. I say 2026 is a buyer's market now, which is an interesting shift. I want to say equity to me is the number one topic of 2026. Keep some cash, have cash to put into stuff, have liquidity, guys, because there are bumps in the road when you're a business owner. And I would say thank you for tuning in to Lords of Lending. Please follow, like, subscribe, and let's do more for our small business owners. That's what we're going to do next. We'll have some owners call in and ask, and then we'll have you on, Lance, and you can ask the wizard, because I think you are just a huge wealth of information and really important nuggets that everyone needs to hear.
I would have so much fun with that. So please do it.
We're doing it.
Thank you for coming, Lance. We appreciate you.
Thank you.